Okay, recording this video before the open on Wednesday 29th of December 2010, and I hope everybody's enjoying this little break that we're getting from trading. Personally, I've not traded for the last week and a half, I think, and I'm not really intending to do anything before next week when we come into the new year and we're going to get extra kind of volume and volatility come into the marketplace. However, I'm checking my charts every day, and I just thought I'd bring something to your attention just over the last couple of days that was kind of interesting. First of all, just a daily chart of the E-mini just to show, extremely light trading here. We're up in the 1250s now, but the volume over the last few days has been extremely light, only about 500,000 contracts traded yesterday. And, the last week and a half, as you'd expect this time of year, extremely light volume. However, don't think that just because the volume is really light that the professionals have gone away and they aren't kind of being active in the background. Just want to draw this chart to your attention. This is a chart of the average trade size on a daily chart for the E-mini. And the last 2 days traded, we've had the largest average trade size that we've seen for almost 6 or 9 months, just up over kind of 6 contracts per trade over the last couple of days. You can see that's extremely high compared to what we've seen over the last kind of rally period since the beginning of June. And if I go back over time, just show you a little bit more back kind of history, these periods when we got kind of very high average trade size shows that that's when the professionals are being active. I'll just draw your attention to this last kind of peak in the market here, which is kind of at the beginning of 2010. So after we had the market open kind of strongly, at the beginning of 2010 we had a real peak over several days here. You can see where the average trade size got substantially higher than it was kind of historically. The market kind of went nowhere and we had a significant decline into February, March. The next time we saw kind of an increase in the average trade size was again into this kind of market rally here into April. You can see right at the peak here you can start to see the average trade size maxing out. Then we get another kind of consolidation period before falling off to dramatic decline that we had mid-year. And then we've had a nice rally since June, the low being put in. And then the last couple of days the average trade size has really kind of spiked up compared to what it's been over this entire rally period. So although we've had extremely light trading volumes, the professionals, I'm afraid, have been very active in the background. So just beware. It's just kind of a little kind of data point. Changes in trend do appear kind of at the beginnings of years. This could be activity where some of the professionals are starting to change their asset allocation, and that could be accounting for this kind of activity. So I'm going to be looking at that over the next few days. Just to show you the 13,500 tip bar chart at the moment, we had been pushing on into these kind of new highs in the 1250s area. Over the last couple of days we've formed an end of trend warning signal here, and interestingly kind of the rise up into the testing of these highs has all been kind of Rambo patterns here. One last week and 2 over the last couple of days trading. So there we go, we've got our end of trend, we've got kind of professional bars kind of coming into this turning point. So I'm not suggesting you kind of take any trades over the next couple of days. Things are going to be quiet, but just keep an open ear or an open mind to what might be actually happening in the background, and we'll know soon enough what kind of is going to take place in the January time period. So there you go, just a little video. Hope your break is going well, and enjoy the time off. We'll get ready for some real serious trading next week.